People are still worrying that we're near a bubble. There's some type of bubble trouble. Stop worrying. There's screaming buys and screaming sells you need to be hearing about right now. J.C. Parets is Eagle Bay Capital founder and president. Great to see you.
Happy to be here, Liz.
Okay, you don't look at all the emotion about markets. You're a technician. You're looking at things. What are the screaming buys right now out there?
Sure. Well, remember the technicals, the charts and price really shows that sentiment and the emotion and really prices that in. And I got to tell you, when the market, when S&P 500, for example, peaked in May of last year, we went sideways to down over a 14-month period. And that consolidation resolved to the upside. And, that was a big base. And when you get an upside resolution from something like that, it's hard to be bearish, Liz.
Okay, so where are the screaming buys?
I like tech. I like big cap tech. It's the largest sector in America, 21% of the S&P 500.
What, Apple, Google?
All your favorite names, Facebook, Microsoft. We're talking about monster capitalization companies. I mean, between Apple and Microsoft alone, we're pushing $1 trillion in market cap. That's driving tech higher, and that's a fifth of the entire S&P 500.
Will they hit three-year highs? Because we're not there yet.
Look,
Apple, would we hit a three-year high?
I think we're heading back towards 130. Whether we break out to an all-time high or not, we'll reevaluate at that point. But that's still another 25%. We'll worry about it then.
Okay. What about the screaming sells, JC?
And that, I think, is really, that's the big question. Where's that money going to come from? That's going to flow into the equities market. And I got to tell you, I think it's going to come out of bonds. When you look at the Commitment to Traders report, and you talk about sentiment, right? Super bullish sentiment in bonds, right? Everybody thinks rates are going to zero. Meanwhile, you've got the commercial hedgers, the smart money, if you will, with their, positions that I think suggest that interest rates are going a lot higher and money is therefore going to be coming out of bonds and going into stocks.
Okay.
Right? I think you sell treasury bonds.
I have heard people say interest rates are going a lot higher for months and months and months.
Years.
That's right. We only got one tiny rate hike last December. Now Janet Yellen's supposed to speak tomorrow. What's your best guess?
Well,
on
Liz,
what's going to
we're
happen?
talking about like real interest rates, not federal funds, right?
Okay.
You and I are not a bank, right?
No.
We don't care about the Fed funds rate.
But they do
we care
tend
about
to
30s.
affect the down market other interest rate mechanisms.
For consumers, for market participants that are not banks, we want to look at 30s. We want to look at 20s. We want to look at the 10s. The benchmark, right? We got down to the 2012 lows in the 10-year yield, put in a beautiful failed breakdown, and started exploding. And since then, bonds have been coming off, and I think they continue.
Okay, so JC says get out of that, but you like the big tech.
Yeah.
What keeps you up at night before we go?
So what keeps me up at night, and that's a great question, right? Smart client of mine asked me the same thing yesterday, and that's the real question. Where's the thesis wrong? And I think it's very simple. You look at the S&P 500 and you look at the Russell 3000. Russell 3000 represents 98% of all investable assets in the U.S. stock market. So U.S. equities. And as long as we're above last year's highs, we stay long. If that fails, we'll reevaluate. But as long as we're above that, we're in.
He says go into tech right now. J.C. Parets, Eagle Bay Capital founder and president. Great to have you.